What is up, and welcome to Market Psychology 101, where we look for value in the markets when there's fear and are cautious when there's greed. Today's video, we are going to be taking a look at Bitcoin as well as a number of macro charts and analysis. So let's start off with crypto fear and greed. And as you can see, the fear and greed index, we are back up into neutrality not too long ago. In fact, just yesterday, we were down into fear. Not extreme fear, but we did dip down as low as 28. 25 and under is extreme fear. 75 and over is extreme greed. As we take a zoom out, what you can see is that on the fear and greed index, we have been making a series of lower lows and lower highs. So to see some sort of change in the trend, I don't want to start seeing a series of higher lows and higher highs as well. We are not there quite yet, but there are some various things in the charts that I am looking for to indicate that we are headed in a positive direction for Bitcoin and possibly even altcoins. As we take a look at our seasonality index here, September, we're almost through it. And these 2 months typically are the worst 2 months for Bitcoin and crypto. And it's come as no surprise. We have encountered this yet again. I was talking about this in the stock videos as well, that late September, early October, this is not uncommon at all. However, for Bitcoin and crypto, October through December tend to be the most bullish time, and November the most bullish month there is. October overall, I mean, you can see right here, the last 6 times we've had Octobers overall, they've been very good. You'd have to go back to 2018 or 2014 when we last had an October that wasn't so great. But outside of that, we've had a lot of really nice Octobers. And as I talk about Bitcoin, I want to make sure you guys sort of differentiate this in your head that we are, many of us, when we buy altcoins, we are waiting for Bitcoin to top. Once Bitcoin tops and it's too expensive to buy and keep buying, that's when the last 2 cycles we've seen a rotation into altcoins, the 2 to 4 weeks following the Bitcoin top. Right now we are in phase 2. We'll take a look at the chart, see what the Ethereum valuation against Bitcoin is doing, and we are waiting for phase 3 and that move to the top for Bitcoin. So I do think there are some signs showing that maybe phase 3 is starting to bubble up a little bit, and we'll talk again more about that pretty soon. As far as the Bitcoin compared to altcoin year, we're still very much in the Bitcoin phase. So overall, you do see a series of higher lows, higher highs, a little bit of a downward trend here, but this thing can spike off at any time. So you got to be ready for whenever alt season is. As we talk about macro analysis, I'll be referencing this rainbow chart quite a bit. Now, if you're new to the rainbow chart, any indicator, any chart, any graph, I don't think you can just take it as gospel just by itself. I like to combine as many data points as possible, see if there are narratives or stories that are kind of agreeing with each other. So what we have here, the rainbow chart is a log regression chart. Logarithmic scale goes up by factors of 10, as you see here, and it regresses over time. If you remember the COVID days, which we want to forget, the amount of COVID infections fit on a logarithmic regression scale, where the amount of cases spike up early and then it flattens out over time. That's what we see for Bitcoin. So instead of, investing down here when Bitcoin was, what was that, $240, can you imagine, and seeing it go up to 20K and, doing dang near 100x, nowadays maybe you can expect something like a 5 to 10x for Bitcoin from the cycle lows to highs. So as far as right now, Bitcoin is in this yellow zone, the holdo zone, and that zone, as we just look early October, is around 109 to 143K. And something we've been keeping an eye on, speaking of regression, is we have these regressing peaks, and you can just see how we go down some of these zones each time, and that would indicate if we keep these tops, if they keep going lower, I'd be looking for somewhere in these orange zones, 150 to 250K. Yeah, I've been guesstimating, hey, why not right in the middle? Why not Bitcoin at 200K? If we go to the older rainbow chart, we see this especially true how each top does go down two or three zones. And if we just kept going with that, orange, yellow, light green would kind of indicate the same thing, that maybe we get around a 200K Bitcoin this time around. So that's what the log regression shows. And depending when you are guessing the top might be, if the top is in December, you can see that orange zone. It starts at around 190. If the top is sometime, let's say next May, you never know when the top is. Maybe Bitcoin goes a little bit higher. So do keep an eye on these charts and what they show. Now, as I was talking about phases before, and I made the claim we're in phase 2, and we want to watch for phase 3. One of the asset class I'll say to keep an eye on is that of the Bitcoin mining stocks. These miners, the last couple cycles, have topped with Bitcoin, especially last cycle. Many of the top miners topped with Bitcoin or a couple weeks before, but really close. And we do see the Bitcoin miners really popping off. And so when Bitcoin miners are popping off, that could be showing us that maybe Bitcoin is going to have some very positive moves in the coming months. So do keep an eye on what the mining stocks are doing. As far as Bitcoin right now, it is at a $2.26 trillion market cap. So 2,267,000,000,000. Ethereum right there at $500 billion, $500 billion. All right, let's get into Bitcoin. You can see I had the stochastic up here, and the stochastic is bottomed out on the weekly, which is nice. We do have a couple red candles. So if the stochastic starts to reverse to the upside and get into the shaded area, maybe we could see some good movements for Bitcoin. I do think, even as we zoom out, this has me bullish as well, that the stochastic has plenty of room to the upside, and it can keep going to the upside even after getting into the shaded area. This is where Bitcoin had alt season back here, and we are just right around here, which would indicate somewhere around September 2020. I think we might be a little closer than that. But even 2017, look at how long we were overbought for. Now these phases, they don't hold up as long as earlier. Again, that log regression shows diminished returns over time, but we do have a lot of room to the upside. And I do like what the weekly is showing us with that. As far as the MACD, the moving average convergence divergence, still very much red. I'm waiting for some of these lighter red bars here on the weekly to start indicating that maybe the strength might be flipping to the upside. So that's what we have on the weekly MACD. Monthly MACD, still very overbought, but again, I think it has a lot of room to run. Now, as far as Bitcoin right now, I think it was the live stream last week on Friday. I do live streams on some Fridays. Notice that Bitcoin is in somewhat of a channel here, and I guess we could extend it out from where this move sort of began, that we have hit these series of lower lows, lower highs. You see Bitcoin right now, again, we're on the daily time frame, that it's hitting some resistance there at the 50-day moving average. Now, if Bitcoin can get above that, we have this descending channel right here at about 115K, 115.2 to be exact. Now, you also see this trend line here. And this trend line we've been talking about for a while because I've been calling this an inverse head and shoulders. Now, that move hasn't really played out the way an inverse head and shoulders could or should play out. But, once we do break above that inverse head and shoulder trend line, get out of this descending channel, I think those are two very bullish catalysts here for Bitcoin. So do watch for that 115 area. Now, if Bitcoin gets rejected, comes back down, we do have the 200-day moving average at 106. We also have the lower end of this channel at 102. And if you're wondering what this trend line is here, when we take our Fib retracement and Fibonacci, by the way, it's a golden ratio. You can research that yourself. The golden ratio that is in the universe. It's everywhere. When you look at our veins, the capillaries, the riverways, leaves, anything, the golden ratio is out there. And when you take the high to low fib retracement and you see the extension, we have a 1618 extension right there at 102K. So that 102K, it was a strong area of resistance. You see that more so on the weekly. The weekly, it never quite broke above, tested the 50 week, got above it, made it support. We've moved up, and right now Bitcoin is staying on that 20 week moving average. So Bitcoin might not get below 110, but if it does, we do have the 50 week, that 1618, the lower area of this channel. This whole area, like 99 to 102K, I think would be a very, very strong area of support. And if Bitcoin, I'm not saying it will, but if Bitcoin got anywhere between that 98 to, let's say, 104K area, that is a zone I personally will not miss buying. Albeit there are a lot of altcoins right now, I think, at good discounts. Now, let's go back and reference this rainbow chart. You guys remember how I showed you those orange zones. I think that's a conservative yet aggressive estimate of where Bitcoin could go. You see that 150 to 240K, or give or take around those areas. Now, there's a lot of people out there, they're calling for 250K Bitcoin, 500K, a million Bitcoin. I don't think that's going to happen for a while, if at all. But when we take a look at some of those fib extensions, again, I showed you where the 1618 is at 102K. The 2618 Fibonacci extensions at 155. The 3618 is at 209. Now, last cycle, the top was between the 3618 and the 4236. We have to take our fib off log scale to show those extensions. And there you have it. So you see the fibs got right up to, let's scroll over, between the 3618 and the 4236. Now, each cycle we hit a lower fib extension. We have log regression. But the one bullish thing I'll say for price-wise is, since this time, what has happened since 2020? Well, since 2020, the government has printed trillions of dollars out of thin air. We can go to the U.S. Central Bank balance sheet just to show that. So when the government printed, by the way, this is the USC BBS chart. You can see how we have a nice bounce off the 100-month moving average. We're at the 100-month again, so we could go to quantitative easing again soon. But look at this. We had about 3.8 trillion, and just out of thin air, the government just printed $4 trillion, even close to $6 trillion. So we've had a lot of inflation. That goes without saying. You can take a look at any charter metric and see that we've had this spike in inflation since that time from 2020. So what does this mean for Bitcoin? Well, going back to Bitcoin, what I think that means is that, each time, even though we've hit lower fib extensions, each cycle, I could make the argument that since our dollars have been devalued by 25%, give or take a few percentages, that maybe our target can be that much higher. So originally, for a while, I was expecting, instead of the 3618 to the 4236, maybe close to the 2618. But if we factor in how much our dollars have been devalued and just put that into the price, that puts us somewhere near 190K. And I want you to stick with me on this 190K mark for a second. Remember where that was when we factored in inflation. 190K. You have that number in your mind. Again, the rainbow chart even showed this area of these orange boxes. Right there, you can see late November, 190K. That's at the higher end of the light orange box, the lower end of the dark orange box. And again, one indicator I don't think you can take as gospel, but if we take multiple indicators, let's take our pi cycle, okay? Our pi cycle, Bitcoin has crossed each of the last two cycle tops. We've had these mid-cycle tops, March 24 and June 19, where it ran into it. Now, there's a lot of evidence to show that maybe the pi cycle won't trigger this time because the lower moving average probably won't cross over the upper. Okay, we have diminished returns regression. That's fine. Look where this upper pi cycle moving average is right now. It is right at around 196K, 195K, give or take. All right, cool. So we have this 3618, okay? We have the rainbow chart showing, somewhere around 190 to 200K if you take that number in the middle. We have the pi cycle top. We have the factor for inflation. What is this? Again, around, let's say our dollars are devalued by, 24%, whatever, okay? 190K. Again, I'm not trying to give you an exact number or date, that at December 15th at 3:04 a.m., Bitcoin will hit 190. This is not what I'm trying to do here, but I am trying to show where the data is possibly leading us. Okay, so we have what I would call built up consumer confidence. The last two cycles, we have hit these areas macro-wise, okay? Pi cycle, Fibonacci, log regression. That's the indicator I have on right now, log regression, okay? We have a lot of things to show and to increase our consumer confidence that if we get into those upper areas again, and now we are in the upper log regression band right now, albeit the lower end, but look where the upper end is, where Bitcoin has topped the last couple cycles. The upper end is, again, right in here. Now you can move the date over a little bit. Let's say Bitcoin tops somewhere in December. Again, 190K is not that out of the realm. Now I know right now, for many of you people who are new to crypto, it might seem crazy. Like, really, 190K? How can that happen? I've been here since 2017. All right, I've been here since the summer. I've made money both cycles. I've learned hard lessons both cycles. Not a perfect investor by any means, but I'm sharing with you what I've learned, what I've gone through. And let me tell you, it seems unbelievable at the time. But being here since the summer of 2017, I remember Bitcoin doing a 10x from here and how these 40% pullbacks were being laughed at because it just kept happening over time. 40%. Bitcoin kept having these large major pullbacks. You see right there, 30 to 40%. I don't think people nowadays would be able to handle such volatility. Could you imagine if Bitcoin had half a dozen 40% corrections on the way to the top? People struggle enough even right now. Last cycle, again, there's that disbelief, that euphoria. We had the quantitative easing, that money printing I referenced earlier, and Bitcoin took off. This cycle, they talk about the ETFs, the quote-unquote institutionalization. There's something new every cycle. And we get increasing amounts of people talking about how we are in an AI bubble. Now, we talked about the Shiller P ratio in the stock videos, how the dot-com bubble, when it crossed over 40, we were well within it, but there was still time to go. The AI bubble, if you want to call it that right now, if we are in a similar time as the dot-com bubble, we could still have another year of bullishness for stocks. So if that's the case, I would contend that we haven't hit that euphoria levels yet. And in fact, we go to fear and greed all the time. What have we been seeing fear and greed do the last year? It's been knocking on the door of extreme greed, but hasn't quite gotten there. The last time we were in extreme greed was November of last year. I can't believe we are already coming up to that time again. It feels like yesterday. Okay, time flies. So we have not been in extreme greed since Bitcoin was going to, where were we last November? Bitcoin was making new highs at around 109K. But remember, this move from the rate cut cycle, okay, we've been talking, oh my gosh, let's clean this up. There's been lots of talk about rate cuts lately, okay? We had rate cuts, a rate cut cycle mid-September last year, okay? And Bitcoin went from 60K up to around 109K, all right? Bitcoin went up 50,000 points with that rate cut cycle. We can add that on. Here we go. We have the rates right here. So the Fed cut by 50, They paused because they didn't meet in the month of October. They cut by 25, they cut by 25. So over the course of 4 months, that was an average cut rate of 25 basis points. First one was 50, but then they paused. Okay, so 2 months divided by 50, 25 basis points per month over 4 months. We had Bitcoin go up from 60K to 110K, all right? It went up 50,000 points. We'll find mid-September here when they cut rates, and it went up 82%, all right? What did the Fed just do? They just cut by 25 basis points. Let's get that out of here, clean this up a little bit. They just cut by 25 basis points. So what if Bitcoin has another 90% move up? Let's go to mid-September. We'll go to the higher end. Why not? Let's go to 115K. Now, if Bitcoin rises by 50K, that obviously puts us to 165K, right? If you want to say Bitcoin went from 60K to 110, another 50K, 165K. Now, that's below 190K, but again, I have no problem with that. Whether Bitcoin tops at 165K, 200K, that doesn't matter too much to me, all right? Now, let's say Bitcoin makes a similar percent of a move, okay? 80%. Remember what we were talking about down here. When Bitcoin had the rate cut, let's go again to mid-September. When they had the rate cut, went from 60K to this top, look at the percent of a move, 80%. Let's do that again. And so if Bitcoin has an 80% move, that's right up to the 3618. So low 200Ks, high 100Ks, whether Bitcoin tops here, to me, it doesn't matter. I think there is a lot to show, and I wanted to take this video to just kind of marry all those data points together, that rate cuts, all right, factoring inflation, as I showed you, the log regression, the rainbow chart, the pi cycle top, the Fibonacci retracement. There is a lot of macro analysis to show that that's where the potential top would be. Okay, it's not a coincidence, I think. That is what I'm looking for. Now let's run through a couple other charts real quick. So obviously altcoins not doing too well lately. I mean, that's no surprise. We had a Fibonacci and a moving average support, because it's moving down, at the 618 and the 100-week moving average. So Bitcoin dominance getting a little bit of a bounce. I think it could go up to the 50 and the 20-week moving average around 60%. See what happens there. Maybe we just kind of do a little minor wave up and then continue down 56%, 53%. All right. Total 3, we were knocking on the door of all-time highs. Again, this is why I use Fibonacci candles, and the weekly showed us we had wicks, but not candle bodies yet. Now, total 3 is bounced off this channel, okay, or close to the 100-week moving average, really the 50-week. So if Bitcoin dominance, total 3, total market cap outside of Bitcoin and ETH, okay, so the total market cap of everything outside of these two, that could come down a little bit. Alts might bleed a little bit, okay, but once this shows signs of bottoming, I think that'd be a good, strong time to get into alts. Now, way earlier in the video, if you remember, I said we're in phase 2, okay, we have to go no further than looking at Ethereum's pairing against Bitcoin. You see Ethereum there. Let's make sure our fib's on log scale. So Ethereum, we talked about this, how on the daily, we had the 100-day moving average as well as all these tops. Okay, I think that showed some good areas for support, as well as this 888 fib right here. So if Ethereum gets squeezed here and comes back down, maybe that's 786 at around 34K at worst. But we've been talking about the 3,800 to 4K range, and that's what happened. Now, as far as that phase 2, we take a look at Ethereum paired against Bitcoin, all right? Now, we have this decimal 0.22. That is 22%. Okay, 500 billion divided into 2.27 trillion is 22%. That's what that means. When we divide the market cap of Ethereum into Bitcoin, Ethereum is 22% that of Bitcoin. Okay, now going over to the weekly, there's no denying we are above the 382, Macro fib, okay, high to low. I didn't include these wicks here that were outliers. But either way, whether you factor for them or not, we're above the 3-2 and we're above the 50-week moving average. Both those factors are very macro bullish. Now, we talked about how this 100-week and the 0.5 fib would probably be resistance. It is. If ETH Bitcoin gets down to 0.2 around here, and again, total 3, I showed you the areas to watch for. I think those would be good areas to look for some discounts on your favorite altcoins, should we get there. I think this would be a can't miss area to buy. That might coincide with 104K Bitcoin, 102K Bitcoin, who knows? But that's something I would be looking for right there. A good bounce, and then ETH Bitcoin can continue up. Now, I've been sharing how when ETH gets above the 0.3 and goes to 0.5, that's when we've had alt seasons the last 2 cycles. I mean, obviously, this is ETH compared to Bitcoin, but you guys can see that, whether we add on the Ethereum, chart in the background, you see how it spikes there, okay? Here you see it as well, Ethereum spiking. And again, just to kind of drive the point home, I'm going to add on Bitcoin. Stick with me now. Bitcoin is the purple, ETH is the pink. You see how Bitcoin tops, okay? Then we get that rotation into ETH. And that's when ETH Bitcoin spikes, okay? So you see, this is where Bitcoin topped in 21. Then we get that rotation into ETH, and that's why ETH Bitcoin spikes, okay? So again, that is end of cycle movements. Ethereum is still moving positively against Bitcoin. So we are in phase 2. But once Bitcoin tops, as I just showed you, and we get that massive rotation, in those rotations, Ethereum does dang near a 2x right after Bitcoin tops, if you can believe that. That's when we have alt season. So you want to be ready for when ETH Bitcoin is driving above that 0.3 area. That's when it's truly been go time the last 2 cycles. So just to put a nice cap on this video, I wanted to share with you all the data points that is increasing, in my opinion, the probability. There's no certainties, just probabilities, but the probability that maybe we get somewhere in the high 100K Bitcoin, whether it's 160K, 200K, to me it doesn't matter too much. But we have a lot of indicators, inflation, rate cuts, how that could affect things. A lot of indicators showing this is the area to watch for. So if we see Bitcoin start charging up towards this 2618 fib at around 155K, I would not be shocked to see a little bit of resistance there. Okay, that's a major fib level. But if we start to go through that, in my opinion, that's when it's red alert go time. So, if you want to draw these charts yourself, you can do a fib retracement high to low. And by the way, if you're watching, people like myself or others on YouTube, Twitter, if you can't replicate the analysis that others are doing for yourself, in my opinion, you shouldn't be using it then. Okay, so take obviously everything myself or anyone says with a grain of salt, but you have to be able to chart this yourself. Don't just blindly follow what people like myself are doing on YouTube and other platforms. So hope you enjoyed the video. Hope it makes sense. Let me know what you think in the comments below. Do you agree? Disagree? Do you think Bitcoin can go higher? Or do you think, maybe 130, 150K would be the top? Interested to hear your thoughts, and it is okay to disagree on this channel. Again, I'm trying to build a community where everyone feels welcome to share their thoughts and not get attacked for it. There's too much of that in the crypto space out there, and it's just, I'm trying to build a different place for casual, conservative-minded people that we can just openly have discussions without our heads getting ripped off. So thanks again so much for watching. I hope you all have a wonderful Monday and rest of your week. Take care.